Futures point to a lower open on Wall Street, indicating the S&P will snap its three-day surge as China's manufacturing recorded the weakest performance since 2009. It's the first Thursday of the month, and that means we have same-store sales. Today's report will be of particular interest as it is all around Black Friday results and forward-looking analysis for the remainder of holiday 2011. The earnings calendar is light, but look for commentary out of the numerous broker-sponsored corporate conferences. There's a number of economic data on tap, including jobless claims, consumer spend, ISM manufacturing, and natural gas inventory. I'm Jill Malandrino with The Street, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Jill Malandrino with The Street's Options Profits, and together we bring you the morning call. Wow, what a day yesterday. We're up 490 points after the ECB and 6 other central banks indicated that they're going to loosen some liquidity. The future shot up at 8 o'clock after that announcement was made, and it was straight up, and it closed up just a huge rally. Futures down a little bit this morning, ending that 3-day surge, but it was just an incredible day yesterday.
It was out of nowhere.
Right.
A lot of people said that this should happen, but you never know when they're actually going to make the announcement. And as the action was shown, really didn't indicate that we were going to get such a move and such a big upside surprise as far as the coordinated effort. But you know what? It happened. So when news hits and the market reacts, you have to react with it. And there were a lot of traders short yesterday that if you switched gears and covered, you know, you got out of harm's way with a little loss, but you also could have switched gears and got long because we opened up, I don't know, about 300 points on the Dow, hovered there, and then we finished up 500. So if you switched gears and you didn't get stubborn, you could have salvaged a day, made money. And if you're a macro investor, there were a lot of stocks on the move yesterday that if you pick stocks well, which we try and help you do here, you know, you got rewarded yesterday.
Right, and so we'll see, you know, if this plan that they have, is it a longer term fix? I don't think so. I don't think it's time to jump into the financials yet. But what was really interesting, the chart that we were looking at earlier was the SPX micro version of the macro move, that one-day chart where you see, I mean, that move was just significant.
Well, let's show you both time frames because we try and dissect both of them. So if you take a look at the S&P, you'll see this is the macro chart. Okay, this was that wedge. This was when we resolved to the downside. Okay, and once we resolved to the downside, you know, it wound up holding this downtrend. This is also the Fibonacci retracement, that 61.2% retracement that held. And I know, you know, for a strong tape, it's got to be 50%. But as far as the world that we live in right now, who cares? It held, and now we're right back to that wedge point. We're right back to where we broke down from. So what does it mean? It means a lot if you're trading it, but from a macro stance, you know, it's in a decent spot that could use a little bit of digestion.
Okay, well, you know what? It's December 1st. I can't believe it's already, and this typically is a one of the better months to trade. It's always an up month. Well, it has been historically. Who knows? I mean, intraday, the moves have just been pretty significant.
Well, anyway, so let me just show you quickly from the micro version, because we talk about the macro investors. At this point, you know, what traders are going to look at today is if you look at the chart of the S&P from yesterday, let me show you how we take a look at it because digestion is good. So right here is that macro chart. So if you look at the 5-minute chart from yesterday, this is what you saw. This was that huge gap up. So if you were short, you had a little bit of time to cover in here. And then you had a consolidation all day long. For the entire day, it went sideways. And then on that last hour, you had some follow through into the close. So for today, futures are down a little. So for traders, they're going to look to see if they could buy this dip, buy around 1235 to about 1230, you know, 4-ish. This would be the range from yesterday. And then a little bit lower, I would say for the market to hold in really well and for today to be constructive, we shouldn't breach this point. So, you know, support 1, support 2, that's what traders will look at. And as we digest that, then we can get some follow through moving forward. Okay, let's take a look at our sector spotlight today. We're going to view some 52-week highs, starting off with MasterCard and Visa. They have been solid performers. Yeah, we always talk about finding relative strength, and if you're a macro investor for the longer term, you want to find the stocks that are acting well. So even if you don't trade actively, you want to be in the right sector, right time, and it's good to see that there are stocks near 52-week highs or stocks going through it. And we've spoken about MasterCard and Visa numerous times. So if you look here at the daily chart of MA, you will see that this stock is at highs. It's above all the moving averages, so it's in the game as we say it, and you're being rewarded. Visa also doesn't have mortgage exposure, and at this point, after the regulation that was cleared as far as credit cards, it got a boost, and now it's at new highs also. So MasterCard and Visa, we talk about not being so heavy in the financials, but these two scenarios have been working out well for the macro investor.
Moving along to tech, we've been talking about the semis for the past couple of weeks with you and with Mark, so let's take a look at Intel and then also Big Blue IBM. That's one stock that you're certainly not going to get fired having in your portfolio.
Yes, and we've talked about it, and when Stephanie Link also said that she loves IBM. And I think the theme here is, high beta tech's been a little weak, but mega cap tech has been stronger because I think people want to be comfort, they want liquidity, they want a little bit of a dividend, they want names and Intel changed its character this year, and it actually looks really good. If you look here, it's followed all the rules, it's above the moving averages, showing relative strength, it held this prior pivot, and now it's getting back to these highs. So this stock is in the game for new highs. Then you talk about IBM, different character, but also looking good. This stock has a nice little upper channel right here. It's above the moving averages, just like I showed you with Intel. It never even went down to the 200-day, and it held this pivot. And at some point, this stock's going to clear new highs as well. So watch this 190 area for momentum to the upside. I'd like to see a little bit of a rest here, and then it could power through for the traders and for investors that are holding.
Moving along to JOYG Global, this is one of those acquisition speculation names, and this thing's been up over 9%.
Yeah, and it looks really good. So it's just showing you that there are stocks in each different sector that are on the move. It's not just one. So if you look here at JOYG, you will see stock had a nice move yesterday. It too, look at the same type of characteristics, above the moving averages, held the private pivot, and now it's coming into this resistance that if it could hold sideways just for a bit, I think traders are going to be looking for a nice, juicy move through this 91.50 area, and then you have a room right up to about 100.
And wrapping up with Humana, we typically don't get into the large cap healthcare names, but this stock looks really healthy.
Yes, it does. And,
cheesy, I know.
There you go. HUM, I don't really trade it, but just shows you that some things you can invest in, some things you could trade. And if you look at HUM, this stock also, if you picked it well, it's right near these highs, believe it or not. You had, this potent down day that gave us a bit of a correction, held above the moving average, held the prior pivot, and pow, 4 big days. And now this one on a macro level also looks ready to break out the high. So it shows you that if you do your homework and you're in the right sector and you look for relative strength, you can hold stocks even if a market corrects, but you just want to do it in a way that you have your risk tolerance.
We'll come back to you with a few more trade ideas. We're going to go into a quick commercial and hop into the trenches.
Hi, I'm Sean Hendelman, CEO of T3Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back. We're going to hop into the trenches, moving into a new theme. Our Q3 theme was earnings. You got to be strong. You have to have solid performance and solid guidance. But I think our new theme moving into 2012, the retail names are incredibly overvalued, but the industrials have been quietly performing. Their valuation looks really compelling right now. Let's kick it off with CMI. It's a favorite of Stephanie and Kramer. All these names are nice, healthy dividend plays.
I like this name, and just to give a big picture of the industrials, I want to just quickly show you the ETF, because I want to show you how it's in the middle of the range. It's not showing relative strength where it's ready to break out, but it's also not one of the biggest laggards. So sometimes there's good opportunity there to get into a tier 1 when it's within the range, and then you get to tier 2 when it starts to outperform and show relative strength. So if the thesis is correct, which I think it could be, you have a few different entry points, and right around here is one of them. So you go to the XLI, you will see that this ETF is right in the middle of this mid-range, but approaching resistance to start to get a little frisky to the upside. It's not up by the old resistance, so you're not worried about a breakout failure into new highs. So you could be getting involved in these stocks in this area, and then once we finally clear this resistance, perhaps that could be a tier 2, and we haven't been in tier 2 in a lot of stocks in a while, especially since that wedge broke to the downside. So as far as CMI, which you guys want to look at, I think it's acting okay. If you look at the chart, it still has a lot to prove. It made a low, a higher low, pretty potent day. I would say that this stock could be a tier 1, and then as it comes into this downtrend, okay, and does a little bit more work, maybe you can get into tier 2 once it breaks above this area and holds it.
Moving along to PCAR, a trucker name that we started to look at recently over the past 3 weeks.
Yeah, this is a name that I'm not that familiar with, but if you take a quick look here, you can get familiar with it quick. And this too isn't showing extreme relative strength. It's not something on everyone's radar now, but you have a buyable area. You could buy it above this 36 area, and then with some time, it could contend with these highs. So with a bit more time, a little bit more clarity, this would be your tier 2. So tier 1 versus this 37, and then maybe at some point in the first quarter, you could add to it for momentum once it starts showing its face and acting better.
Moving along to JCI, another healthy dividend play. This was up over 8% yesterday.
Let's take a looky here. So you take a quick look here. This too, pretty similar. This one actually, to me, looks a little bit better than the last one where it's already clearing this minor downtrend. Okay, so it cleared it with some force yesterday. I'd say tier 1 buy within this area. And then at some point, it's going to contend with this resistance. And at that point, that could be your add. So we cleared the descending channel, tier 1, and then more work to do, tier 2. And then at some point next year, if the thesis holds in correctly, you could be contending with that bigger resistance to the right.
Deere and Caterpillar, those are two names that you could talk about together. There's been a lot of traction in these names. Deere, the chart looks okay. Caterpillar closed at its 200-day moving average yesterday.
Yeah, both these stocks have been things you could hold. They were definitely a little bit more whippy than they've been over the course of the past few years, but so is the market. So if we take a quick look at Deere first, Deere at this point is coming right up to that resistance. Okay, so this looks like, there's demand here. I would have, hopefully you bought a little bit on the dip into the support, because last time I drew this line, that's when we were saying maybe if you sold correctly, you could buy back. And now you have a big resistance around 80, little sideways action first, and then if it punches through 80, you'll see that moving average around 81.72. And as far as CAT's concerned, it also, I think last time we talked about it, I drew this little descending channel here. We broke above, so hopefully you're in tier 1 right around here. And now traders will be looking for it to break out and hold above this area. But just remember, with momentum, the way you get into a momentum trade is if it stays above that momentum level. So after a quick 3-day move like we've seen in a lot of these stocks, some might try and push through resistance, do a bit of a squeeze, and then come back below it. If you're trading it for that tier 2 momentum, just make sure that you lighten up if it doesn't stick. But tier 1 in these stocks looks good right now.
And speaking of momentum, let's also take a look at Alcoa. This name was really active yesterday in the option space. The December 10 calls were really, really active. I think the most active series. And that tells you there's a lot of near-term bullish bias.
Yeah, and if people are looking for names, this one has been battered and bruised. And, this also could be a little bit of a January effect stock. A lot of people didn't want it on the books. A lot of people wanted to just step away from even like a lot of the financials also. So once they've already done that, then you see that uplift because no one's taking tax loss selling on it, and it could have a really good January. So if you look here in Alcoa, you'll see, again, you're kind of bottom feeding here, but it did have a good day. It's trying to take back the moving averages like I showed you in the sector spotlight. These look a lot different, but these are just a start. So here's your low, here's a higher low, maybe tier 1 here, and then it'll have some resistance around 11, 11.5, but at some point, if the world does get a bit better, you could see a move to the moving average, but that's going to probably take the entire year, but that's a nice 40%.
Right, so rounding out our sector theme that we're looking at going into 2012, I'm really starting to get more positive on the industrial space. And again, when you have a market that was up 490 points yesterday and the industrials outperform the S&P, to me, that's a really healthy sign. Let's move along to quick hits for some quick cash. Let's kick it off with Apple. This is a name that you can make a career out of trading the ranges. Not too much compelling to look at now, but you still have to talk about it.
Yes, Apple has been lagging. Even yesterday, Apple was probably one of the stocks I made some cash flow on because Apple and Amazon both opened up. Futures made a move, it didn't, so some of us made some money short. Then at the end of the day, it played catch up. If you look at the macro chart of Apple, you will see it still has a lot of work to do. Hopefully it gets away from this longer term uptrend that I showed. It did hold the 200-day, but it's not acting frisky like it used to. I would say it has some easy room to about 383 to 385, and then you're going to have a brick wall up at 392. So for cash flow, I think it has an easy move back to around 390, 392. But longer term, it's still somewhat in the penalty box. Don't go to a tier 2 if you're holding a long term. If you're trading it, make sure you watch the price action.
Speaking of penalty box, Amazon, this poor stock cannot get out of its own way. It got slammed after earnings, which was one of our favorite short calls that we had for Q3. And even yesterday, market's up 490 points, and this thing was a relative weak stock.
It was, and that was another thing that helped save my day. It opened up above that 192, and then futures showed relative weakness. So as a trader, you can make money there. Shorted it, and it almost went negative, where I think it might have went negative when the tape was so strong. So you take notice to situations like that. So here, let's watch the character. If you look at the chart, you will see that it's in this lower range. This was that move after earnings. It tried to, get its footing back and then broke to the downside, and now it's hovering here with no traction. So this to me still looks weak, but Amazon has done crazier things. If it starts to get above this 195, you could see a squeeze back to 200, 201, but this stock is still in the penalty box in my opinion.
And our third stock in the penalty box, Netflix, got downgraded by a broker yesterday. Really?
Right? That guy earned his paycheck.
Right. Talk about reactive analysis. Anyway, that's a conversation for another time, but let's take a look at that one.
Yeah, I think a lot of traders made money short there yesterday. It was the same thing. It went negative first and then was down like 3.5. Real quickly, you look at this chart, it's like on the death walk. You know, it's at the lows and it's just looking lower. At 64, you know, we talk about momentum stocks when they lose momentum, and we showed you this many times. Look at this uptrend that was intact. Once Netflix broke this area, look what happens here. That's why when you're playing momentum, follow momentum rules, and here's where it left. And you know, now at this point, you know, it still looks like it could hit, you know, somewhat in the high 50s or low 50s.
Moving along to an outperformer, Las Vegas Sands. This is one of our favorite names to trade in the stock and option space. This is up over 6.5% yesterday, and again, this is a relative outperformer, and we love to trade this one.
Yes, sometimes I love to trade it.
Right. As long as it goes your way, you love to trade it.
It's very streaky, but it does give you action, and LVS is still, I can't believe it's still in this channel. It's been in this channel for so long. One of these days, it's going to get above 48, 49 stick, and you're going to see 55 so quick. So you need to be in tier 1 LVS. This has been a macro trade that we've talked about, so we could have almost had it in the sector spotlight. Big channel. This time, it's held this descending channel, starting to get to the upside. Some traders made money there yesterday. At this point, you know, it could see a little bit of a sideways action, but I do think that if this market gets any traction into the end of the year, this will clear 49 and could get to about 55 at some point the first quarter of 2012.
And rounding it out with Green Mountain Coffee. This stock is GRMN.
It's okay.
Got my tickers a little bit confused.
How about we do both of them?
We can do both of them.
Because I was looking at GMCR for today because I see a small, tight pattern here. I know it's been battered and bruised, but for cash flow, if Green Mountain Coffee could get above this 53, you know, you could see a move to fill a portion of this gap just for cash flow and just for quick traders. So that does look okay. And as far as Garmin,
begging to get through its 52-week high. That was the whole point.
There you go. We could have added in the first part too. Believe it or not, this stock's regrouped. It's got an identity again. Everyone wrote it off for death way back when. And if you look, you know, it's had a really good move, and surprisingly, because no one really talks about it. But it should pause around this 37, and after holding higher, if it could stay above this range, go sideways, some traders will be trading this for a 52-week high.
Okay, so we had a 3-day surge in the markets. We were up over 490 points yesterday. Today, I think we're going to see a little bit of corrective action, a little bit of a breather, although we do have November same-store sales, so look for a lot of that Black Friday commentary, holiday 2011 outlook, and you'll probably start to see some analysis looking into January as well. We have jobless claims, ISM manufacturing, and we also rounded out with natural gas inventory. So there's a lot to look at today, even though we're going to probably take a little bit of a breather.
Yeah, so digestion is good. You still have a lot to deal with, a lot of headlines. You saw it also this morning. I think Spain yields are at like 17-year highs, so the market's kind of ignoring it right now as it's in rally mode. If we could digest, go sideways, we're going to set up for a better trade. And as far as the market's concerned, I think, Jill, the important thing is, which we always talk about, is know your time frame. If you're in this for the next few years and you have these macro stocks, you know, be in a level that makes you feel comfortable. There will be times you could add to tier 2, tier 3 when the market has that formula of an uptrend. Right now, that formula is not intact. So stay light and quick as far as tier 1 as a trader. Just keep following your rules, and sometimes we'll get more clarity. Right now, the last 2-3 weeks has been tough, but you know, bad times lead to good times, and the 3-day move should give us a better trading environment as things loosen up. As now, the bears must be honest. Right. And the bulls could feel like they missed something, so that gets attention on the market, and that can mean money in your pocket.
Right, so traders, you know what, you can't fight the tape. We might see a little bit of digestion today, but that doesn't mean you can get sloppy. I'm Jill Malandrino. That's the morning call.
And I'm Scott Redler. If you miss part of the virtual trade floor or are online during the day, just catch us on the recap around 4:15.